Most people say you can't time the market. I say you have to. I'm Scott Redler, Chief Strategic Officer for T3 Live. I would like to invite you to an exclusive swing trading event in Newport Beach, California on Saturday, February 23rd. Students will learn the 5 keys to becoming a successful swing trader and how to navigate the market using what I call a portfolio approach when it's conducive in the market. Reserve your seat at t3live.com or call our toll-free number 1-888-99-T3-LIVE.
Good afternoon, everybody, and welcome back to another StockTwits Q&A session. I'm Brittany Umar, joined by Scott Red Dog Redler. Scott, you ready to answer some questions?
Just like 1 or 2.
All right, well, we have a lot more time to fill than just 1 or 2, so don't let Scott scare you. Keep them coming. But let's start with one from Stone Street Trader here, who says, could you explain more what you mean by portfolio approach and tactical approach?
It's a great question, also depending on where we are with the market, because we just had our first 1-2 pitch that brushed all the bulls back, so it was conducive or it was prudent to switch some gears. So I know for me, I'm an intermediate trend trader. There are guys out there that are macro investors, those that don't worry about these ebbs and flows. For me, so I can sleep at night and I can make P&L, I tend to try and stay with the trend, and for me, a trend is easier to stay with when we follow the 8/21 day moving average. And I think I've beaten that horse as much as I can over the course of the past few months, that as long as we stay above the 8-day moving average, I could be in portfolio approach. I could hold between 4, 8, 12. I think at the most I had 15 positions. And then once we start to break that moving average, which for me, becomes a little bit painful to hold positions because I don't, I'm in front of my desk. I could be long, I could be short, I could add on shares. It's time for me to turn more tactical, because once we do start to break lower, you never truly know where we're going to go. Same way we didn't really know when or how long we would follow the 8/21 day moving average. You never know how deep the correction is going to go. And today you saw so many people out there, oh, we're going to have a 15% correction. Oh, we're going to have a 10% correction. Nobody knows. So right now we're 2 days deep into some type of corrective activity. You go to the chart of the S&P and you will see ever since we started the move to come, in the beginning of the year on that gap and go, we let the 8-day moving average catch up. We take a little bit of a closer look actually here, and you'll see that we followed the 8-day this entire time. And during this time, you could have had a nice amount of positions on in a lot of different sectors, hopefully the leaders. Then we went a little bit sideways. If you look on this day, which we talked about in the morning call on February 4th, was like the first day we really closed below the 8-day. And I know that day I took some positions down because I didn't know what it would lead to, but there's really not much confirmation at that point from other sectors that they were starting to break down. And then we continued all the way to finally yesterday. We tweeted, I think somewhere, you can look at my feed, anywhere between 2 and 3 o'clock, saying if we break the 8-day, good time to take off some of your portfolio approach. If you've been tracking it the whole way up, maybe add some shorts, or even get net, or add to your hedges, or get net short. And then we said the first stop would be the 21-day, which we broke below, and now we have a new point of reference around 149.94. And this would be a decent spot for quick traders like myself to cover some shorts. And then here's a little bit more of, a deeper support, which isn't even that deep, 49.50. And then here is what I think is very, 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 did I say very, Brittany?
You said very.
All right, I usually do that with Darcy. I have to repeat myself when I want to make a point. So 14.74, which if you look at the spiders, you go across right here at right around the 50-day. This would be a nice spot that I think that we could look to buy back more swing positions or portfolio approach, because at this point, maybe we bounce around a little bit, but I'm not sure if that's going to be the actual spot to put longer term positions on for an intermediate trend trader.
Well, we are 2 days deep into corrective action. As you said, the S&P posted its worst 2-day loss since November. So our R of us trading right here is asking if buying the dip here is a good move.
I don't think you need to be in a rush to buy the dip. I know some guys on the feed yesterday when we were like halfway down, like, oh, I'm buying my longs now in the red. I'm like, this is the first potential engulfing down day, something different. Why would you be rushing to put on positions? And meanwhile, yesterday we closed at dead lows. Today we had some follow through to the downside. So I think today was one of those days where you could have covered some shorts, because we were about 25 handles off the highs. If you go to the S&P, the SPX, you will see the high here was 1530. The low today was 1497. So this is the first time we've come 30 handles off the high. So a nice spot to cover some quick shorts. So I would think right now, what I would like you to do is just, be a little flexible, be a little tactical. The longer we stay in this bottom end of the range, the longer we stay below, just say 1511, the higher the probabilities, maybe we take out this support for a move down to 1474, which would test the breakout level from September, and that would be a great spot to own. But, the next few days, I do think, we'll bounce around and it'll be crucial.
Well, Spy Surfer then says, so Scott, when would a good time to go long the spiders be?
Well, it depends on your time frame. I think right now for intermediate guys, no need. You could play, I think what we're going to be in is this time period where every now when you're in a little bit of a corrective phase, you could buy them lower, but if you add to your position after a quick little bounce, you ruin your average price, and you might even ruin a trade that was a good tactical cash flow trade. I think right now is the time to just be tactical. Don't be a hero. Don't think that you want to, find that little low bottom, buy that big time pivot, because we are in the beginning stages. And, also the same way you don't want to be all in short because you don't know. A day and a half move doesn't make a new trend. But for now, what we know is the ascending steep channel has resolved. So if you were playing it for that, and that was your process or your formula, you get out and you get flexible. Now we need to see if some bigger support will hold. Because if you go take a look here, really, let's go back to the chart of the SPX, take more of a macro approach, and look where we are. Okay, this is the October red dog reversal low. Here is your, another higher low. Here is your, what was this, the November 6th? No, this was, the November 16th low. Here's where we started the year. So we're right here. So the last thing you want to do is start buying too much here for what could be a bit of a deeper correction, and then you can't hold because you started too early. So just take your time. Be happy that you switch some gears up here, so this way you're flexible and you can embrace the volatility if we do trade lower. And if you look at these corrections that we've had, we've had some corrections where they do go a bit deeper than just a day and a half.
Well, as Jay Eden notes here, banks that let us higher are breaking down on heavy volume and breaking channels and trend lines. He asks, will they lead us lower?
What's interesting is that they didn't start to lead us lower. If you remember yesterday, I talked about how the home builders were already breaking the 21-day. The ags were weaker. Even the OAHs were a bit weaker. So it feels like the spiders and the banks had to get pulled down. And then today, when those tried to stabilize, the leading sectors, took a little bit of a discount. So I do think that they're worth watching. I don't know if they're going to lead us lower, but we're going to have to figure out where their support is. And if you look at the XLF, you'll see, look at the size of this move. Okay, you want to draw some trend lines here just to see what's buyable. If you want to go all the way back here, this is the trend line that comes all the way up, and you don't see, a support here all the way down to this 16 level, which I don't think happens. That would be a very deep correction. Then if you want to take another trend line right here, you will see it comes in right around the 50-day moving average, which I do think is a little bit more doable. So if you go and come closer to look, you will see that this ascending channel that we've been riding with the 8-day wound up breaking with authority yesterday. So hopefully you got out there, and if you laced in or you leveraged short, today was probably a bit of a day to cover. I do think that 1705 would be a level that I think is a time to test and try and buy the dip. I don't know if we get there. Right now the new point of reference is 1745. So we'll see. You have another level right here around 1730, but ultimately the 50-day is right there. And if you want to look at some sectors that let us lower, like look at the home builders already. Home builders, they broke the 8-day and the 21-day, and it's trying to hold the 50-day and this more gradual moving average. So don't be in a rush to do anything right now. This was your accelerated trend that broke. If you got out here, maybe you had the opportunity or the luxury to buy back here, but see if this proves worthy before perhaps even lower prices, because this was the first group to break down, and the home builders have been the group that led us up in the past year and a half with the financials.
Now, I think investors are really throwing their hands up in the air when it comes to Apple. The stock is obviously still under pressure. What will it take to see some sort of complexion change?
I guess now we're looking at the shareholder meeting on the 27th, and this stock's been battered and bruised, and people have been taken through the cleaners. Even me, who follows technically the composure of it, I've probably been a little bit too, I would not say stuck in Apple land, because maybe now I traded once or twice a day versus all day long like I've done when Apple traded better. And we've caught a few different 1 to 4 day bounces. 2 weeks ago, we had a really nice one from 435 to fill the gap of 485. But if you look at Apple now, it's coming back into that danger zone. All right, here was that head and shoulders top that was 700 when the iPhone 5 was launched. Here is when it broke the 21-day moving average, which is the first time it did it all the way back from the summer. I remember when I started my swing trade long again in August, and it was a really nice hold into September. This is when we got out. And if you remember that Kramer show, I'm like, if it breaks the 21-day, which it didn't do here, and it didn't do for that entire move, it's a time to maybe test the 50. Then we tested the 50, 3-day move, broke below, and then this huge decline finally till we had that November 16th low, which gave us a nice move. And listen, when an Apple move happens, everyone gets happy, because when it's tradable and you could hold it, it could pay some bills. And then it broke right here, and then from there, this descending channel has been controlling the trend for from September all the way to where we are now. So with that said, we're coming into where we filled the gap, just dripping lower. I know for me, I've tried to play a few gap fills, a few cash flow trades, and it's been very hard to make money there. You want to draw 2 trend lines here. This is your new one, which we're below. Ihorn spoke today, didn't say anything new, wasn't a catalyst for the stock. So here's what we know. Here's your descending channel. In order for this to get any better, okay, it's going to have to break above today's high with authority, maybe 449. But we're now hovering back near big time support. So we break below 442 or below 435. Then you have to start going back to the macro charts here. And there are some people talking. And I know I had Carolyn Borodin here, who said that we should break the lows, hit 425, or maybe even fill the gap all the way down to what could be a 400 or maybe even a 3 handle. So this has been a sharp decline. Hard to be short here, but if you try to be long it, you're not having much success either, except for little micro scalps.
Well, speaking of Carolyn Broden, we have Evan English asking, could you please update your and Carolyn's fantastic fib analysis of Facebook? And that stock closed down over 4% today. So what do you think?
Facebook was one of the positions that I actually kept on yesterday. I think I closed down a lot of my longs. As I said, when we broke above 1474 to get up to 1500, I think I had 15 different positions. Lately, I was down to like 4 to 7, and then I kept Facebook on as one of the ones that I do think the high of the year is not in. But since I am an active trader, I don't have to sit through downturns or through noise, because I know when I get a Bible set up, I can get back in. For some macro investors that are just sitting in it, okay. Today I got stopped out. I got stopped out right around here. I was talking about 28. I said once 28, gives way, I'm not going to be stubborn. I'm just going to, get out of the way, because I could always buy back. And the reason why 28 was my stop was because of this price pivot point. So here was the high, which we sold pretty well coming into earnings, and then it got a little wishy-washy. Here was a bounce off of this 27 level, and then I figured maybe in a better market, if we can get above 28.5, 28.75 and hold, we can continue and then navigate this channel and see more upside. But what happened was it got turned away, got rejected. Okay, we trade real time. You have to take real time or make real time decisions. So in the bottom end of this channel, we turned down. So I stopped myself out right around 28 to 28.05, and I didn't trade it the rest of the day. I wound up closing on the lows of the day, coming into a price point. So this is your next support, 27.10. If it were to break this, your next point of reference comes in all the way over here. Okay, so short term, if you don't want to be in this noise, short term it looks more negative than positive, and that's just the way the technicals look, not my opinion. My opinion was that this is not the high of the year, but again, there's 10, 11, 12 months left. Not that many months, actually. How many months left of the year? We're in February. We got about 10 months left. And you saw how quickly we went from 24 to 32. It could happen again, but I'd rather do it when the tide's in our favor versus against us. So right now, when we're in a corrective process of the market, if you're going to be an active player, there's no reason to just sit there and hold your nose and go in the water. Now,
Ben C. Banks here wants to know what you use, arithmetic or logarithmic charts, and why?
What did he say?
Really?
Very smart for a 17-year-old. By the way, I'm going to give him some props because I like Ben's work ethic, and he adds a lot to the Twitter's feed, and he's only 17. So go props for Ben, and hopefully one day you'll be working here with us.
Go, Ben.
As far as charts are concerned, I think they're all calculated a lot of different ways, and depending on the time frame that I'm approaching them, I use, daily charts in order to figure out, my overall strategy. But then when the day starts, I have a 3-minute, a 5-minute, a 15-minute, a 60-minute chart all up. So I get to make my shorter term decisions based on those time frames, and when they all line up, that's when I put on more size versus just cash flow. So a lot of people have different types of algo charting software. So just whatever you trust and you go with that works for you. Like a lot of people say to me, Red Dog, why do you use the 8-minute chart, not the 10-minute, the 10-day chart, sorry, the 8-day chart versus the 10-day chart, or why do you say the 21 versus 20? Something I'm used to, more proprietary versus not. So just use whatever works for you, whatever works in your formula, slash process.
All right, let's check in on gold. Also, Stone Street Trader says, do you think the GLD will bounce from here or test more macro support?
I think the GLD is oversold enough to try and bounce, but overall, there are 2 time frames that people approach it. And recently, a few weeks back, we talked about the intermediate time frame, when you had that triangle, you had that pennant, when we weren't sure which way it was going to go, but it was something to focus on because it was so compact. We love tight patterns because when they resolve, they expand. I cheated to the upside, and I was wrong. I was buying like 162s, thinking if we get above 163 in the GLD, we'll get a nice move. P.S. That jobs day, I remember, we broke below it, I got stopped out, and I haven't really touched it since. Some guys got out of their longs and flipped short and made a lot of money. Some guys held their nose and said, I'm a macro investor in gold, and meanwhile, you're not probably feeling so good. So, you take a look where we are here on the chart. Here was that triangle. Here was that pennant. A series of high, another lower high. Here's where it looked as if we were getting tight enough to maybe break above or break below. We wound up breaking below, and even if you didn't do it on that day, when you saw this gap not get filled, okay, that was your spot to get out and look for a short, and then from there, boom. Today, with the market weakness, I think the market's, when the market's weak, gold's trying to be a little stronger. So there is a chance it tries to fill this gap, but I think the longer it stays below 155, the higher the probabilities that we see a move below 151.44. And then you have to look here on the chart and you see, more macro support. This was support all the way back from last, summer, / October, and then April. So here is where more macro guys are going to pay attention, because if this were to give way, you then have 140, you go to your monthly chart, and yes, although I know this looks like a very, very strong trend. Did I say very, Britt?
You did.
I did. This triangle now broke to the downside, and here we are. This thing breaks 148. No reason why you don't see 140, and maybe a little bit lower. So, we shall see. You do have, a nice trending market here. It's coming a little close. So it breaks this. If you're a macro investor, you better take a little notice, because you could see some more downside. But I do think this is a spot, where yesterday we talked about on the Twitter sphere to maybe cover some shorts and then measure the action. If the bounce is feeble and doesn't have much power, we could take out some of those macro areas. All
right. Well, you and I talk a lot about your tier system, whether it's on Morning Call or here. And King88 is asking if you can give an example of how you scale into positions using your tier system. He asks, if you take a portfolio of $100,000 as an example, what would tier 1 be?
If you take a portfolio of 100,000, meaning I'll put it in because it's not a clear-cut question. Using a tier system, this is what you do. Okay, when a stock is incubating, okay, and you think it's in a flag type pattern, ready to break out, you take tier 1, which is something that has you committed, something to have you watch it, and then when it gets in motion, you go to tier 2. If you have $100,000 overall to allocate to a portfolio, and not say just positions, it's different. So just say if you have $100,000 to be in a core position, I would say tier 1 should be like 30,000. When it's really setting up and gets in motion, maybe you go to 60,000. Okay, when it's a perfect scenario, when just say the market's pulled in, we're about to start a new rally, it's going to clear a core position, kind of like when Bank of America closed above. Just go to Bank of America 995. If you remember on the daily chart, right around here, this could have been your tier 1, right when it was holding in this channel, and then literally, your tier 2 could have been in here, and then tier 3 went in motion. And the reason why this could have been your full core position, because at this time it was, look at this, it was 12:05, so it was December 5th. We were already above the September highs. If you go to that same date in the XLF on that December, just say 5th, whatever that was, which was right around here, okay, we actually even lower, we weren't even above the September highs. So right away, XLF, which was a powerful group, was trading below its September highs. Bank of America, which was right in the running for it, was clearing it. So you had relative strength within the group. You had a group showing relative strength to the S&P. So this should have been, if you have $100,000 to be in a core position, this was your tier 3. So then on this motion, maybe you got back to tier 2. And from here, you had another motion. And then right around here, maybe your tier 1. And then you held tier 1 the entire time. And then as it cleared another level, because you weren't sure if it was going to continue right around here, maybe you got back to a tier 1.5 or 2. And now, at this point, I know I have a little bit of a trailer, just say, left in Bank of America. Some people probably sold out yesterday to get flat. For me, I'm trying to show people that are taking a portfolio or a swing macro approach, you could hold it, versus all my other positions, which I have like a swing active approach, because I know that I'll be able to reevaluate, like even Facebook. If I was taking a swing macro approach, I'd probably sit in it, but in a swing active approach, I don't need to deal with those ebbs and flows, because when I see a reversal or a red dog reversal or a more conducive market, I'll get back in. Because so many times a macro investor say, you know what, I'm going to get out of Bank of America at 1140 because I'm going to save myself some money. Then all of a sudden Bank of America goes to 11, they feel really good. And then 3 to 6 months from now, perhaps it goes to our target for the year of 14 to 16, and they never re-entered. So what's very important is knowing your time frame and knowing if you're going to get out of something short term and you're looking at it more macro, that you get back involved.
All right, well, keep the questions coming, guys. We're going to take a quick commercial break, relieve Scott, and bring in Mike Lee to answer the rest of your questions. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and answering your questions live. We're here with Mike Lee. Mike, welcome.
Good afternoon. How are you? I'm a little taller than Scott, and I need the camera to be fixed, but we'll just work with this right now. I'm here to clean up Red Dog's mess, and let's answer some questions.
All right, let's jump right in here. We have one from Johnny Bravo saying, what's your favorite trade setup?
All right, my favorite trade setup, I love the morning trade. I always will preach the first 30 to 45 minutes, hour of the day, and generally I'm looking for a bullish, bearish wedge or flag after the first 30 minutes of the day. I like to have consolidation. I'm a low-risk trader, so I definitely need that support under me or resistance for my out. I probably will talk a lot about defining risk through this, quick question and answer with you guys, but I love the bull flag, bear flag scenario after 10 o'clock for a new high trade or new low.
Laveco right here says, Mike, can you describe your thought process for trades on a day like today using 3D printing stocks, like 3D Systems as an example?
Okay, so 3D Systems, 3DD, or whatever you want to call it, is a stock that is on my radar, on my watch list every day right now. DDD, SSYS, XO&E, the new IPO from a couple weeks ago, are 3 stocks that I am filtering to. I am trading, I'm understanding levels, and my thought process in these stocks is understanding levels, okay? And it's really important to, just trade these stocks. You look at DDD, and here's a trade today, and you go out a little bit on the day chart right here, and today was a bearish trade in the morning. And as you can see, it fell hard, right? And I'm looking for trades in the morning to give me that trade. A 5-minute low, for example. The thing that we discuss in our Momentum chat room in T3 Live is that we're looking for patterns that will give us that chart action, right? that trade that will give us that 5-minute follow through, that high trade. And today was a good example of DDD breaking that level early in the day and just giving us that momentum. That's what we're looking for. We had a low risk scenario, and we're trading that action. If it's 5 minutes into the day or 45 or 2 hours, always remember that 5-minute high and low will give you that area of potential momentum.
So 3D Systems has been on your radar every day. How closely have you been watching Wells Fargo?
The banks, to me, I was looking at Goldman. I don't really watch Wells Fargo as much as I do the higher beta. Can you just raise that camera for me? Scott's about 2 feet shorter than I am. Thank you. All right, there we go. Wells Fargo is in a tighter range on the daily. If I go out a little bit on Wells and you just look, it did break out, okay? It definitely is a stock that, let me just zoom in here a little bit, had a nice run, but it's not a stock that I'm looking at because the intraday range, a lot of traders are confused about, oh, you're focusing on a lot of volume, or you're focusing on, range. To me, it's all about range, right? Apple, I don't care about the day volume in Apple. I really don't. You're looking for trades. DDD, yes, DDD can be a little thinner than some stocks, but I'm looking for that range. And if a stock that has $3, $4 range in it is going to give me a lot more potential to make a good trade and to make maximized trades. And I'll go to Goldman Sachs. Goldman Sachs has been a beast. Look at this trend line up. I'm sure Scott drew this earlier today, and it broke, right? And this doesn't break 50 cents. You don't need much size to make a living in this profession. 500, 300 for new traders who I love helping and teaching in our chat room, because I love teaching, because everyone who wants to be taught this profession has a passion. And to me, a Goldman Sachs type trade gives you an opportunity to make a lot of money with very low risk. And to me, Wells Fargo doesn't have enough range for me to get involved.
Well, I want to see if this would change your mind at all, because touching back on Wells Fargo, LP here says it has been showing relative strength the past 2 days. It did close up over 1% today. Would this be one that you would watch when the XLF turns green?
Yes, I would. I consider Wells Fargo more of a swing, hold bank, a little more security if you want to be involved in the banks. Through more volatile time, yes, Wells can give you a good trade. I don't follow Wells too often, but it is holding in nicely. I do think it gets above 35, 80, 36. This stock, potentially gives you a $3 trade. You could see $40 pretty quickly in this stock.
Well, Scott has talked a lot about the S&P getting to 1,700, and he recently said, maybe it would actually happen sooner than we expected. And Stone Street here says, do you still think the S&P can get to 1,700 in the next 2 years? What do you think?
Absolutely. The markets, I've been investing in the markets. Let's say I finished school in 98, 97. I invested. My first couple trades were KLM Airlines, ESV, ENSCO, and I also remember the markets haven't moved in the last 10 years, but every time we have pull-ins, if it's to 7,000, if it's to 10,000, to me, we are most likely, okay, long-term, always going to go higher. I wouldn't be surprised if we don't see 20,000 on the Dow within the next 5 years. I believe that, but in between, if you're a short-term investor, the macro levels to me aren't as important. It's more the micro stocks, finding those stocks in shorter patterns. But on the macro game, I'm a big believer in, and I have done it and done very well in average costs. I always put money in the bank in these pull-ins. I don't care if I love when the market comes to 1440, 1350. I will invest because I do believe that the markets will go higher and the economy is getting better. We have been in a decade of tight ranges. I just want to show you a couple stocks that I feel, like a Johnson & Johnson. And you look at Johnson & Johnson, it goes back all the way back into, 2-3 years right here. It was in such a channel. That's what sort of the stock market has done. You get dips, it comes back up, you come back in. Johnson & Johnson to me has been been one of my best investments over the last 10 years. It pays a nice yield, and we finally broke out. And I wasn't, worried about it. This is a bullish pattern, and that finally broke out. And if you look at the spiders, it's more extreme. But the spiders, to me, looks like Johnson & Johnson, just on a wider time frame, on a bigger range. And the markets are going higher. I mean, we lived through the banking crisis. We lived through so much negative stuff that on a macro sense, I'm with Scott. 1,700, 20,000 on the Dow, 4,000 on the NASDAQ. That might be a little reach for now, but why not? 3-4 years is a long time.
This is true. This is true. All right, well, that's kind of a big picture look. Let's get into some more stock-specific questions here. We have one from Arnav asking for your opinion on First Solar's chart, FSLR.
Okay, FSLR, wow. Every time I look at the solars, I go back to 07, 08, and that was my best run in this business. It really was a profitable time for traders like myself who found a sector. I hope these 3Ds and SSYS and a couple others come out to be like a solar sector. But FSLR, just look at it for the last couple months. It is a stronger stock. It finally broke out, but it can't hold above 35. And I'm looking at 35. Here's your tail. It tried. You get resistance into this area around 36 and change. So to me, I want to see a flag form. I want to see a bullish channel in FSLR, maybe more of this type of scenario back here, where this line is right here. 5-6 days of tight consolidation above a breakout. I want to show you a pattern that I would like FSLR to look like, would be like a sell G, where you get consolidation. Here's a breakout. Here's a consolidation time. Sell G has been a stock that in the last 10 to 15 trade days will not give us a trade. You have support at 97, 96. You have resistance. It can't close above 102. So I want to see FSLR have a little more base under it before it springs. It's still a speculative play. I mean, look what they did to some of these solars today. I mean, JKS, look at these big down. I'll just zoom in a little bit. This is a day chart in JKS. I mean, you're losing 15% of your value. TSL, a cheap stock. I mean, that thing just broke down. SPWR has been amazing. And I want to show you SPWR. I had some calls on this and made a nice trade. And SPWR, here's Buffett. He invested in some solar. This is SunPower, if no one's familiar with it. Big move, held 750, broke up, great trade. And this thing also, I mean, we got to $14 almost from 750. That's, quickly, I, didn't do that great in math, but that's almost 100% return in, a month. You got to take profits. Don't get greedy. And this thing might come back down to I don't know if this line is a 200-day or 100, but, retest of 1150 in SPWR. But I do want the solars to have a little more base.
All right. Well, we talked Goldman before. We talked Wells Fargo. What about AIG? Warm Trade Winds is asking, Mike, is there any good action in AIG? Where in, where out?
Yeah, I heard today that AIG is more widely held than Apple in funds throughout the world right now, which is pretty incredible. I mean, AIG was a stock that we thought was just done. I mean, they got rid of everything, dividends. I mean, this thing split, I don't know what it was, 20-to-1 reverse split, whatever the case was. But now it's become back in play. And I think AIG, in my opinion, is one of those stocks that you might want to look to buy on a pullback. You could get this thing a tail down today. I don't know if I had news after hours. But this stock, to me, is on a trend here. It's holding in. Let me see if I can draw the lines. I don't know how this works. I'm a rookie here. 13 years experience. I can't draw a line. But here you go. You have support right around here at 36.50. I like AIG. Yeah, it did break down. But look, the market is going to come in. Goldman Sachs, to me, that looks ugly, right? It had a great run. But Goldman's still, to me, a leader in the stock market. If the market is going to find a support and give you a bounce on a day, 2-day trade, AIG, Goldman Sachs, I mean, these are some leaders. Obviously, Google, Google's an unbelievable stock for the year. I mean, these things, Google's raised to what, $1,000 price target this morning, gapped up, failed the gap a little bit, but you want to find strength. Before we get to the next question, I personally would say have a list of strong stocks that you want to buy on pullbacks, weak stocks that you want to short on rallies. I do think this market gets a little sloppy from now until April, May. That's just my opinion. Do we see a new high? We could. Do we see another 50 handle pull-in? Absolutely we can. But I do think it's going to become a stock selective market like it always is. Get that list of strong stocks, weak stocks, and also the small caps that you like to trade, like the XO and DDD.
So what list would you put QCOR on? Because Worm Trade Winds also asked about that stock. That closed up nearly 4% today.
It's QCOR. All right.
QCOR.
Yeah, QCOR. So QCOR, we know it had that big down move back in mid-September. The stock has been on my radar list. It's been a tough trade for me. I haven't done well in this stock on a day trade basis, but you have your support right here. Oh, can't draw lines on this thing. I'm new to this charting system. It's not working. But here's QCOR base 25. So we definitely have base at $25. Amazing support there. It's run, so 25 to 31, that's a nice little pop right here. It's coming into resistance at this moving average. I would say QCOR is another one that I do love long, but I also would look for support back around 30, major support at 25 for a trade higher. This thing has potential to get going. Maybe it's waiting for that little catalyst, news, earnings, but those look definitely stronger than weaker.
Now, what about BP? Lee here says it looks like a bottom here.
BP. All right. So we never know it's a bottom, right? To me, this is a scary chart. We're getting close to 52-week lows. Not 52-week lows, but just, let me pull out here a little further out. It does look like support. So to me, I'd rather say for you to say this looks like support with more of a controlled risk. You have 39.50 to 40 area. Definitely looks half decent. Closed at 40.79 today. That's not too far off from that area. Big down move. You had, this is a bearish pattern right now with major support between, let's say, 39.50 and 40.50. And if you could get that close to there, you understand your risk. I don't follow BP that often, but it's better to buy something here than definitely at 44. So I do think this could be a half decent swing long off of $40. Absolutely.
All right, well, here's a question we don't get all the time from Tommy. He says, do you trade your positions in your IRAs like you trade daily? I'm having a hard time not trading in mine.
That's a great question. I do have an IRA account that I trade, my personal account. My suggestion is, and I talk about this in our momentum room a lot, you need two accounts. So you need your IRA, to me, for longer term trades. There are people who day trade their IRA. I don't suggest doing that. I suggest getting another short-term trading account. An IRA account, to me, is a longer-term scenario, right? Look, you could be bearish. I can't tell you not to short the market. You could be bullish. To me, I use my personal as more of a bullish account, buying pullbacks in the market. But to answer your question, I do believe you need two accounts. I am an active day trader. I hate using that term, but I do. I make my trades and generally go flat. I sold my options today. I am completely flat right now. I don't like this area in the market for a bounce or a pull-in. I want the market to tell me what's going to happen. I like the charts to tell me what to do. So if you look at the spiders, we had our pull-in quickly. Just look at the VIX. I'll just pull up the VIX real quick. I can't really zoom in here. So here's your move in the VIX the last couple days. That's pretty big percent. I mean, we saw a low around 2090, a high at 2410. That's a huge move in the volatility index. I don't think the VIX is a good tool long term. I think it's a horrible tool, as a matter of fact, to invest. But for a day trade or one or two quick bounce, it's half decent. But an IRA account, keep it as your IRA account. Just decipher a long term and a short term account. It'll make you at ease a little more, because to me, if I had them together and saw that I'm down X amount of dollars in my swing and I come in with maybe a different attitude towards my day trade, it might affect me a little bit. So I like to come in flat. We talk about risk, and to me, the overnight game becomes a risk game if you're not, controlled and comfortable with that.
Bob here says, using today's market, how will you know when the trend changes?
How will you know when the trend changes? I guess I'll have to ask Scott Redler. Right? To me, trends take a little longer to change than 1 or 2 down days. We've seen this a lot. I mean, we've had, pretty good moves in the past 6 months. To me, I think a trend changing is more a psychology thing, and on a chart, you want to see a bearish pattern. So to me, 2 down bars, okay, tomorrow and next week is key. If we stay below 152 for the next few trading days, I do believe that maybe potentially we're starting to form a little more of a bearish pattern. If we break above 152 and they crack this little downtrend in the last 2 days, the trend to me hasn't changed. And, you really want to start looking at signals. Don't look at Apple. I love, Apple's bouncing, the market's going to go up. Apple has nothing to do with the stock market. I think Apple's turning into a fundamental story rather than a technical. That's why you're hearing all these, up dividends and all that kind of stuff. But what you want to see is a bearish flag. Let me go back a little bit. And you look here. Here's a little different pattern right here. Here's a bull flag that broke. And you see this consolidation? So if you have about 7, 8, 10 trading days here, cracked again, that's what you want to see. I don't think we're going to get smoked tomorrow. We might have an up day or down day. I don't really care. I'm looking for some stocks to trade. But on a trend reversal, you want to see a little more consolidation on a bearish pattern for your trend to reverse.
All right,
Okay.
well, that is all the time we have for questions today. Thanks, guys, for sending in some great ones. We'll meet you right back here next Thursday for another StockTwits Q&A. Have a great night.
Take care.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.